Hello, and welcome to the Laddercast, where we teach you how to leverage your assets to change your life. I'm Sorcha Porter, and in 2016, I bought my first home, which completely changed the trajectory of my life. I turned that property into a business, a trip around the world, a new career, and quadrupled my household income. And now I'm a real estate agent licensed in Oregon and Washington.
And I'm Shannon McAllister. After finishing college with a degree in finance, I was in a job I hated but couldn't quit because I wasn't making enough money. I signed up for a class to learn about mortgages taught by a real estate investor. 17 years later, I'm a nationally licensed mortgage lender, homeowner, and investor myself. We aim to educate how getting on the property ladder by owning just one home can change lives. It changed ours.
Hello, and welcome back to the Laddercast. I'm Sorcha Porter.
And I am Shannon McAllister.
And today we're talking about 2-1 buydowns.
Hooray!
So houses are expensive, right?
Yep. Interest rates are high.
And how can people afford houses at prices that are an all-time high and interest rates that are a recent all-time high?
Not a forever all-time high, but higher than what we've been used to.
The answer is 2-1 buydown.
Everything old is new again. We used to do them back in the day a long, long time ago when interest rates were at these higher levels. They become popular, and when rates go down, they go away. But here they are again, and they are great. Let's talk about them. Let's figure out how they work, how you can use them, and how you can use them to get a lower interest rate on your house and your payment.
I'm finding these to be really, really valuable, particularly for my baby investor clients, since what I specialize in is helping people get into investment or investmentable properties. Investmentable properties so that they can cash flow them. Mm-hmm. The 2-1 buydown is really appealing to that crowd, but it's also appealing to a lot of people who maybe are just trying to get into their first home and they want to take advantage of the less competition that we're having right now, mm-hmm. but are not as personally comfortable, even if they can technically afford it, with those higher payments that are coming with the high interest.
Yep. That's often the scenario of 2-1s that I am running right now, is not first-time home buyers, but move-up buyers moving into a larger, more expensive house. And with that comes a much more expensive payment that is a little hard to swallow at rates where they are. So they're considering 2-1 buydowns to help keep the payment lower until the point that hopefully they can get a lower permanent payment there forward.
Yeah, it's a really good tool. It's a great way to, mitigate costs for mm-hmm. the short term while you work on other aspects of your financial plan. Also, you may hear borks and jingles from the Corgi Gallery. Shannon and I are recording from our respective home offices, and my home office includes 3 very sweet but incessantly busy corgis who, right up until we hit record, were being very quiet and are now walking around. So if you hear click, click, jingle, jingle, woof, woof, that's my bad.
That's her tribe over there. They're all very excitable and all very cute.
But let's back to 2-1 buydown. Shannon, what is a 2-1 buydown? Can you give us the definition?
Yep, we've been talking about it. Let's talk about what it is and why it's so great here. 2-1 buydown is a temporary interest rate reduction paid for by the seller. That's the key to the world in it.
Yeah.
You get the seller to pay to reduce your interest rate for the first 2 years of your mortgage, if that's the deal that you can negotiate.
Yeah.
Here's how it works. In the first year of your mortgage, your interest rate is 2% less. And in the second year of your mortgage, your interest rate is 1% less. So I'm going to make up some numbers here. Did you track with that?
That's hence 2-1, 2%,
yep.
1%.
Yep, there you go. I'm going to make up some numbers. Okay. If, for pretends, that your interest rate is 7.5. That's the interest rate available to you to purchase a home today, which is really not far off from the truth.
Yep.
If you are able to negotiate a 2-1 buydown, in the first year of your mortgage, your interest rate will be 5.5. In the second year of your mortgage, your interest rate will be 6.5. And then the third year of your mortgage and every year forward from there, you will adjust up to the final 7.5%. Now the anticipation is,
that's it.
Do it.
Oh, yeah. So the idea being that interest rates go down, or you come up with another element to your financial plan to mitigate that higher interest rate in a 2-year period. It's basically it's buying you time.
Yep.
It's a seller paid time purchase allotment.
And we're back from the corgi break.
Sorry about that. There was a brief interruption for Borks, and now we're back. But as I was saying, the idea of a 2-1 is that from a real estate perspective, the seller is buying you time to create an additional financial plan, whether that is either, betting that interest rates will come down and refinancing, or saving up enough or increasing your rent if you're an investor to justify that additional cost in 2 years. There's a lot of different ways you can navigate a 2-1 buy down, but they're a really useful tool, especially now.
And then the trick of it is you can't pay for it yourself. You can't buy your own 2-1 buy down. The seller must pay for it. So that's the trick. Let's put the seller's money to use. If you're going to get a credit, let's discuss where and best that credit is applied. So that way you're getting the biggest bang for your buck.
Yeah.
And if that answer is the 2-1 to get you a lower payment for those first 2 years, that's great. The second half of the plan is, what are you going to do with that savings while you have it?
Yeah. And you need to really think hard about how that's going to be utilized, whether that savings goes towards improvements to the property, whether it goes towards prudent reserve, which is what I would recommend it goes towards if you don't already have it in place.
Odds are you depleted them in order to get into the property in the first place. So let's build them back up.
But also just, you need to have a plan. I mean, Shannon and I think throughout, if you've ever listened to any other episodes, we're big on planning. Hope is not a strategy.
Nope.
Planning is a strategy. So yeah, do you want to go over some examples?
Yes,
Shannon?
I do. As a matter of fact, I do. I pulled an example from a client that Sorcha and I helped at the end of 2022. This person purchased...
His name is Angus.
Yes, Angus purchased a duplex here in Portland, in the Portland area, with an FHA mortgage. Okay, tracking with me so far?
Tracking. Now, for those of you who's listened to other episodes, FHA mortgages have a 3.5% minimum down payment requirement.
Correct, and it applies even on a duplex with 2 units.
Which is pretty nifty if you are a baby investor.
Yep. So Angus here purchased his duplex for $535,000. Minimum down payment of 3.5% was $18,725. His total mortgage, including the fantastic FHA funding fee that we all love, was $525,309. So he has a total mortgage loan amount of about $525,000. All right. At the time of this purchase, Angus's FHA interest rate was 6.25%.
Woo! That's cheap,
right? Look, I pulled prices today just to compare, and we're roughly about 7% for an FHA scenario. So Angus would have been at 7% had he done this now and not at the end of last year.
Yep.
Doing good. Good job, Angus.
Our buy now versus wait episode to learn more about that.
There you go. Prime example. Total monthly payment on that duplex at 6.25% is $39.23 per month. So just under $4,000. Now remember, 2 units, he's collecting rent on one of them. Because Sorcha is a smart and great realtor, she negotiated a 2-1 buy down for Angus.
Yeah. He's also his rent the rent he was collecting was like I think around $2,600 a month too.
Oh, holy moly! Okay. Yeah. With that 2-1 buy down, interest rate in the first year of the mortgage, if we remember how the 2-1 works, first year 2% less, so he is at 4.25.
Woo!
Monthly savings $650 per month in that first year. I didn't even get my calculator out. I'm going to do what is 650 times 12 is $7,800 less in the first year of his mortgage.
That is a prudent reserve there.
And that's only in year 1.
And that's just year 1.
All right. And the second year of the 2-1 buy down, interest rate moves down 1% from the final rate. So 5.25. Monthly savings, $333 per month in that second year. Still not a poke in the eye.
It's a lot better than a poke in the eye with a sharp stick. Yes, it is.
Yep. And then when the third year rolls around, his interest rate will adjust back to the final 6.25 that we locked him in originally. Now,
But the neat part is Angus only needs to live in that one side for 1 year.
mm-hmm.
So by the time he gets to that 3rd year, he can move out. Because I know you didn't calculate it. I'm putting Shannon on the spot right now. But what was the mortgage payment on that 535,000 at 6.25% with 3.5 down?
Oh, I did. 3,900 roughly.
Oh, sorry, I missed it. 3,900. Yeah. So I believe 2,500 aside plus would put him in the black at 6.25% in 2 years. So by the time he gets back up to that 6.25%, which he probably won't because he's a pretty savvy guy and he will probably refinance before then. But by the time he gets to that 6.25%, he will be cash flowing this unit with money to spare, like $600 a month to spare about.
Okay.
Which is pretty cool.
Yeah. Now let's talk about the logistics of how we make this happen. We've said before, I think I've said it probably 4 times now, the seller must pay for this. And how we figure that out is we calculate the actual cash dollar. So those monthly savings of $650 per month in the first year and $333 per month in the second year, sum those together. That is the total cash dollar that it's going to take to buy the interest rate down for those 2 years. That is the exact amount of money you need to negotiate from the seller to make this happen. The seller contributes that money, and that money sits in a fund. And while you make your mortgage payments at the level that you are supposed to according to your 2-1 buydown, each month a portion of that seller paid fund comes out to supplement the remainder of your payment to make the mortgage servicer whole. Now, if interest rates do come down within 2 years and you intend on refinancing into a permanent lower rate, everything that is left in that fund is applied towards your principal balance. It's not lost money. That was the trick. Yeah.
That's pretty awesome too.
Yeah.
That it's applied towards your principal balance. That means it's going towards paying. If you are able to refinance, it goes towards paying off your mortgage faster. And if you aren't able to refinance, you are able to save, in this case, $11,806 approximately over a 2-year period while you work on your investment. It's a great product. But it does have to be, you do have to have an agent who can negotiate that with the seller. And there are different ways to do that. In this case, I think this client, if I remember correctly, I got him like $32,000 or $35,000 in credits from the seller.
There was a large credit. We did the max according to the loan that was done here. Each different mortgage type has a maximum seller credit that can be applied according to the type of loan and the down payment amount. And in this instance, Angus got the most max credit possible. So not only did Angus get this 2-1 buydown, he also had all of his closing costs paid for.
And I think his appraisal and a home warranty. God, that was a great transaction. I did a good job on that one.
Yes, you did. As a matter of fact, yes, you did.
Shameless self-plug. On average, most of my clients pay concessions in the amount of 2 to 3%. Or they receive 2 to 3% in concessions from sellers.
Yeah.
Just on average. That I'm pretty good at negotiating those. But you have to be kind of strategic about picking properties when you're asking for those sorts of concessions. And that's all goes into the process of finding out what an ideal transaction looks like for you. If you're listening to this and you think a 2-1 buydown is something that sounds like it would be a good fit for you, like make sure you talk to your realtor about that in advance. Don't just like expect to show up and be like, I would like a 2-1 buydown, please.
Right? No, everything is dependent on the situation, the seller's position, how much they owe, the competition you're experiencing when you're making an offer on that house. All of these things factor into that. And again, that max of what is allowed to be credited towards you in a purchase. If the max you can get is 3% according to the loan type you're doing, you have to make some decisions about where best to apply that credit if you're going to go for it. Is it towards closing costs? Is it towards a 2-1 buydown? Because remember, the buydown must be paid by the seller, which means if you want to do both, you may not have enough to do both. You may have to make a decision about where to apply money. And it's all part of the strategy long term. How long are you going to be in this property? Where is the money best applied? What's the biggest bang for the buck? Those kinds of things.
Exactly. And in Shannon's and my case, we love to work with like new investors or, investors in general. And so for a lot of investors, the they want the buy down because it means that they have better cash flow. But it might be that you get into a transaction and your maximum credits would be better put towards like a seller credit for your closing costs, because maybe the house needs a new water heater or a new electrical panel or something that is expensive that requires cash to make happen. You really need to talk with your lender and your realtor about how best to utilize the funds that you have access to and the credits that you could have access to best suit your plan, which is why the plan is so important.
Yep, it's all part of the strategery. What else do we need to know about 2-1 buy downs? I left out an important part here.
Ooh.
Yep, ready? The banking part of this business, the banking part here. In order to do a 2-1 buy down, you have to be able to afford the house at the higher rate. If interest rates right now are 7.5%, the bank needs to know that you can make that payment and you qualify for that payment now. There is no way that they are going to qualify you on the lower payment, knowing that it's going to adjust up and then being in a terrible spot that you may not be able to make that payment. So you have to be able to afford the house at the higher payment. And then the 2-1 buy down is just bonus for you. Bonus cash for you, bonus cash flow for you, but you have to be able to afford the house at the higher payment.
Exactly. And I think that is also just key for any real estate investment strategy, whether you're looking at a family home or an investment property. You need to treat it like it's an investment, and you need to be able to afford it at its maximum cost without it being a terrible financial strain.
That's correct. Because while everybody is anticipating that rates hopefully in the next 12 to 24 months will come down, which at that point then you would refinance into a lower permanent rate, no guarantees about that business. So You need to know that you can stay in this house and in this mortgage if you need to for the long term, if that's what you have to do.
Yep. No good lender or realtor will tell you, yeah, rates are definitely coming down, because we don't know. And I think that makes a lot of people nervous. I know I watch my clients get nervous about it when I won't give them that answer, when I know that's what they want. I'm like, if I told you that, I would just be blowing smoke up your ass. Like, it just isn't true. I can't tell you. It's the future. So you need to plan. You need to make your financial plan for your home or your investment around what you can afford right now. And that needs to be how you look at it. You can't pretend that future you is going to have magical money.
Yeah.
It just doesn't work that way.
Yeah. Nope. So that's the deal. Use this as a great tool to springboard you forward, either in cash flow or with savings or with investments. Otherwise, while you're saving those dollars during those 2-1 years, and have your plan in place ready to go when and if the magical time hits to refinance, and get yourself into a permanent lower rate when you can.
Yeah, because you know what 11,806 is? That's almost 2/3 of another down payment for the same size house.
All right, Sorcha's thinking down the road for you already. She's putting you into one house and is moving you up into another one in 2 to 3 years' time.
I just want everyone to be a property mogul. That's my dream. All my friends and family have little property empires that they get checks in the mail every month, and they live their best lives doing whatever gives them passion and joy, because they've set themselves up for success in their future.
Right? Isn't that wonderful?
Yeah. So if you want to be part of that club, you can call us. We would like to talk to you.
We'll let you in the club. That's okay.
But yeah, 2-1 buy downs. They're good. They're a great tool.
Right? Let's get after them. They kind of went away, it seems. Everybody was hoping that the rates would come down this year in 2023. There was words and buzzes going around that in maybe Q2, Q3 of this year, we should start to see the relief. And it's not happening. It hasn't happened. And there are no indications that it's going to the remainder of this year or maybe even next. So let's bring them back.
Yeah, bring them back. Talk about a plan with your realtor and your lender to use them if that's something you're interested in, and how to make that happen best within your strategy of procuring a property. And definitely get pre-approved now if you're thinking that's a thing you want to do. So if you go to our website, theladdercast.com, you can click on Work with Shannon, and that'll take you directly to her mortgage application. And then she will automatically set up an appointment to talk with you in person, because she's a real human on the other end of this computer.
That I am.
And if you want to talk to a realtor in Oregon or Washington about doing this, you can click on me, Work with Sorcha, and we can set up a meeting to talk about how we can get you a 2-1 buy down on a cool property.
There we go.
So,
let's do that.
Let's do that.
Sounds like a good week.
Come be part of the Tiny Empire Club.
Deal.
All right. Thank you guys so much for watching. Again, make sure you like this podcast, give it a 5-star rating, share it with a friend, and follow us if you want to be updated on future podcast release dates.
Okay, I'll do that. Done.
All right.
All right.
Shannon's going to do it. You should do it too. All right. Thank you guys for listening today, and we'll see you next time on the Laddercast.
See ya. Bye-bye.
Bye.